Alright, so in this video we're going to build an ETF portfolio built just like a bank mutual fund, like an asset allocation one. We're going to use strategic asset allocation, basically always aiming at a specific target. So let's take a quick look at RBC's aggressive growth 100% mutual fund portfolio. This is RBF 592. It was made back in 2007. There's almost $5 billion invested in this, and everyone's paying an MER of 2.13. So long story short, the bank is basically saying, hey, with this piece of paper, we're going to make $100 million this year. So if you've paid an advisor over 2% over the last 15 years, you've grown your money 8.8%. Not too bad. But if you've chosen to just take care of your own money and not use an advisor and just buy XWD instead, you've made 12.05%. Now I know that doesn't sound like too much, but literally you've probably already saved thousands of dollars in fees and grown your money thousands of dollars better just by you clicking a simple button. So again, strategic asset allocation is rebalancing your account to the set percentages that you choose. Basically, at any point, this could be every month, every quarter, semi-annually or just annually, you rebalance your portfolio to the percentages that you started with. And basically, this is going to rebalance your account and make it safer. So to make things a little easier, I'm just going to focus on stocks today to kind of show you how everything splits out just with equities. People kind of like stocks a little better than bonds anyways. Now, when you split up your money in the major markets, that's what iPiggy was, something I created years ago. So basically, there's 4 different asset classes: emerging markets, international markets, American markets, and Canadian markets. So when you split your money around like a mutual fund, you're going to build a portfolio maybe 10% ZEM, 15% XEF, 50% VFV, and 25% XIU. Basically, this is just matching an ETF to the asset class. So 2022 rolled around, and at the end of the year, I launched InvestCan. Basically, the only difference in this version compared to the one in 2017 was, hey, I'm splitting up the American equities. I'm going to say, hey, we're going to buy something to attach to the market. So you split up the American equities with the NASDAQ and the New York Stock Exchange, and like you're always going to kind of look for a TSX market index for Canadian equities. So then in 2023, the idea evolved just slightly in 2023 to include US sector ETFs. Basically, this allowed to have basically zero bias whatsoever. Every ETF is looked at and in a category. So in the US sector asset class, it's also looking at global sector equities and also industry equities. And in the Canadian asset class, it's also looking at Canadian sector funds like a ZEB. People normally have a bank bias in Canada. But then the MGM portfolio came around and said, hey, let's put tactical asset allocation over tactical asset allocation over tactical asset allocation and just give you the absolute unbiased number to build a portfolio. So I'll get into that in another video.